Hi, everyone. We have James Arney here today to discuss the 2024 legislative session. And to begin with a quick recap, this year MSATP focused on 106 bills that directly impacted the industry and clients. MSATP submitted written and in-person testimonies on critical legislative items. We supported two significant bills introduced by the Comptroller's Office, favorable to tax professionals, and played a crucial role in opposing HB 1515, which is sought to extend the sales tax to tax preparation services, successfully preventing it from advancement. Our discussion today will center around the most impactful bills and their implications for tax professionals and clients, and we aim to gain a deeper understanding of these legislative changes, identify any potential challenges, and explore how we can best prepare our members for compliance and strategic planning. Jim, thank you for coming in today to discuss our bills for our members.
My pleasure.
And we'll go ahead and get started. We'll begin with a bill from Estates and Trusts, HB 325, SB 164. I'll let you give a quick recap about the bill, but how will this change the definitions to impact tax and estate planning services?
Well, basically, this bill does three things. It establishes that a legatee ceases to be an interested person if the legatee's interest has been fully revoked, recalled, or canceled. And a legatee is someone that's in a will, listed in a will. It adds an interested person as a surviving spouse who is timely filed that election to take an elective share, and a person who timely files a petition to challenge a will. And the third thing that it does, it establishes that an assignee of a legatee or an heir is no longer an interested party. So those are the three main things that this bill changed.
Awesome. And then we'll move on to the personal income tax portion. We have HB 646, SB 108. Could you provide a brief explanation of how the consolidation of subtraction modifications under this bill benefits police, auxiliary, and reserve volunteers?
Sure. As every tax preparer knows, there are several police, auxiliary, and reserve volunteer programs out there, one for the police and a separate one for the fire and so forth. And what this bill does, it consolidates the existing subtraction modification programs for volunteer police personnel and volunteer firemen under one umbrella called Public Safety Volunteer. And it also will, beginning with tax year 2024, increase the subtraction modification amount from $5,000 to $7,000.
Okay. Awesome. And then next we have Senate Bill 288, which was the State Board of Individual Tax Preparers Sunset Extension. Why is this extension important for the Board of Individual Tax Preparers?
What the legislation that was enacted to create the State Board of Individual Tax Preparers was introduced and passed in 2008. And that legislation provided that this program or board had a sunset date of July of 2026. But there's been some concerns about how effective this board has been. And this bill extends that sunset date one more year, which doesn't sound significant. But I think what the meat of this bill is that it requires Maryland Department of Labor to submit a report to the Joint Audit and Evaluation Committee by July 1, 2025, with information regarding the State Board of Individual Tax Preparers. That doesn't sound significant, but the Joint Audit and Evaluation Committee will determine what information they have to report on. And I know from experience when I was with the Comptroller's Office, the Joint Audit and Evaluation Committee is very strict.
Okay.
So they want to see the effect that this state board is having in a positive way on tax preparers.
Okay. Well, I'm glad that was extended so that we can figure out how effective the board is and maybe assist in some way of making sure that it's more effective. Okay, and then we'll move on to HB 451, Senate Bill 1142. I think it's safe to say that we all know that there's a group of tax repayers that need support and tax assistance. So it was nice to see this bill. Can you give us a little bit of background on this bill and then the funding that will be provided?
Sure. This bill reinstates an existing provision regarding funding from the state's unclaimed property fund to the tax clinics for low-income Marylanders. And it's going to increase that amount. It used to be $250,000 under the old law. This bill will increase that beginning in FY 2026 to $500,000, and then to $800,000 for the Creating Assets, Savings, and Hope, which we know as cash campaign that reaches out to the low-income Marylanders. And of that, either 500,000 or 800,000, 150,000 of it will be used to provide to the 3 tax clinics, one at the University of Maryland School of Law, second one at the University of Baltimore School of Law, and the Maryland Volunteer Lawyers Service. So each one of those clinics will get 50,000 each to help fund and augment their time and effort in providing tax preparation services for low-income Marylanders.
That's great. And then next up, under enforcement and penalties, we have HB 452, SB 675. This bill began in a legislative meeting between MSATP and the Comptroller's Office. I believe you were there. Our members often voice concern about scam preparers and the amount of new clients that had previously been scammed at some point, coming to them for help. It was really just great that we led the charge with this bill. If you don't mind just going through what the bill is and what are the key elements of the bill.
By January 1 of 2026, this bill requires the State Board of Individual Tax Preparers to publish on their website certain pieces of information, such as a code of ethics and rules of professional conduct for engaging in practice of income tax preparers. Those individuals that take the exam through the State Board of Tax Preparers. It requires the board to notify the Comptroller's Office of specified actions and violations under the Maryland Individual Tax Preparers Act. Up until this point, there's been no communications between this board and the Comptroller's Office, and this is critical. It grants authorized employees of the Field Enforcement Bureau with the powers, duties, and responsibilities of a peace officer for the purpose of enforcing the laws pertaining to income tax preparation. So if there's a violation, the Field Enforcement Bureau can go in and shut them down.
And that's great because they weren't able to do that before.
No. It requires the comptroller to notify the board after prohibiting an income tax preparer from submitting income tax returns electronically. And you'll see the Comptroller's Office will send out a notice that they've identified these tax preparers that are submitting fraudulent returns, claiming the taxpayer has their own business when in fact they don't, or inflating deductions and so forth.
Sure.
So the comptroller stops them from still processing electronic returns. He must notify the board also so they can take action on that service.
That's great.
And an income tax return preparer who willfully prepares or assists to prepare and a tax return is subject to a fine not exceeding $10,000 or punishment not exceeding 5 years or both. And I don't believe there was that provision under the existing law that created the board. And lastly, it prohibits an income tax preparer, again, from willfully preparing or assisting to prepare a tax return, a violation of misdemeanor subject to a fine of $5,000. And that $5,000 would be paid into that tax clinic fund that would be used to support the clinics that are providing that service to low-income Marylanders.
Awesome. Awesome. Okay, and then moving on, we have the electronic filing requirements, HB 455, SB 677, which was the electronic tax and fee return filing requirements. How can tax professionals prepare for this transition? What is mandatory for the electronic filings?
This one, you really have to read the bill because there are a lot of exemptions in there or exclusions depending on certain circumstances. And it's a little bit ways off. It's for periods beginning after December 1, 2026. It's a lot of the small type fee returns that get prepared and submitted to the comptroller, like the tire recycling fee returns, bay restoration fee, admissions and amusements tax, alcoholic beverage returns, digital advertising, gross revenue tax returns, motor fuel returns, and the sales and use tax returns and tobacco tax returns. They won't be required until after January 1, 2027. And then beginning in tax year 2027, income tax withholding returns, which is the second largest source of revenue, because you're actually withholding the taxes from the employee's wages and remitting it to the comptroller's office. Income tax returns for pass-through entities and income tax returns for corporations with at least 15 employees. And then the third category will begin in tax year 2030, where it's individual tax returns subject to specified exceptions. And without getting into it, but I looked at one category. It's like a married couple filing joint. If their income is below $400,000, they can exempt out of filing electronically. And I'm not sure, I would like to have a discussion with the comptroller's office to understand why they made that threshold so high, because the federal requirement doesn't grant that exemption at that level. So it's going to be interesting to see how that goes.
So we have about 6 years for that.
Right.
Okay.
And then it does also prohibits a tax return preparer or software company from charging a separate fee for the electronic filing of an authorized return. So they can't say, well, it's $500 to file it, but it's $100 tacked on to do it electronically. They can no longer do that.
Interesting. All right, and then lastly, we have, which has been a very hot topic lately, the Family and Medical Leave Insurance Program, HB 571, SB 485. And how do these modifications affect the tax professionals and their clients?
This is going to be really pretty all-encompassing, I think, for employers and their employees. But I think the main thing to understand on this bill, it's delayed the implementation of it, which I think is good for the state to do it. If they're going to do it and do it right. And also it gives the businesses or employers that additional time. For example, the program start dates are delayed by 9 months to July 1, 2025 for required contributions, and then 6 months delayed to July 1, 2026 for benefit payments to be issued. And the Secretary of Labor must set the initial total rate of contribution by February 1, 2025. Now that's about 5 months before it starts to begin. So that is important for the employers to know what that contribution rate is going to be. And then there are other things like in private employer plans. An employer must be authorized by the Secretary of Labor to provide a private employer plan instead of participating in the Maryland program. It's got various enforcement and penalties in there, administrative changes. The definition of wages is changed to conform with the definition of wages under the Maryland Unemployment Insurance Law. And it also expands what is included as compensation for a self-employed individual. So there's a lot of pieces that employers need to review that bill and make sure that they understand it, maybe talk to an attorney if they have to,
Sure.
so that they're in compliance from the get-go.
Mhm. And hopefully we will be able to have a All right, so, webinar discussion next up about we that very have- soon. We'll
That
just
would be
discuss it
very
a bit.
helpful.
It was not successful this year, HB 1515. Do you want to just give us a quick overview of that bill?
Yes, this piece of legislation, it did two things. It was reducing the sales tax rate from 6% to 5%. And it was making it effective to all types of services. Right now, there's about 13 services, if you look into the tax code, that do have to charge sales tax. But this was expanding it to such things as if you get your lawn serviced by a lawn service company and they mow it and mulch it and all that. When you go get your hair done, fixed,
Nails?
nails, haircut, getting your car fixed,
Wow.
all kinds of services. And this bill was introduced previously in 2020. And they provided in the fiscal note with an appendix, and that was a 1.5 page list of all the services that that bill would apply to. And I'm telling you, they did not miss any. So the point I'm making is it was introduced in 2020. It was introduced in 2024. Both years, it was introduced late in the session. You can tell by the House Bill numbers 1515. That was introduced February 25th, almost 2/3 through the session. 4 years ago, it was House Bill 1268. That was introduced late. But since this type of legislation has been introduced 4 years apart, I'm saying that we need to keep watching on it because it's going to be introduced time and time again until some version of it passes. Maybe they weed out, so to speak, some types of services that it doesn't apply to, but the sales tax is going to apply to services in some shape or form going forward.
Well, we'll make sure that we're actively keeping an eye on that. As you said, it's not the first time it's come around, so I'm sure it'll be back very soon.
Absolutely.
All right. Well, thank you so much, Jim. This legislative session was eventful and successful. Thank you for coming in to discuss some of the hot topic bills today. I hope the members receive valuable information from this discussion. And if you have any questions, please feel free to reach out to me. I'm Gigi Hawkins. You can reach me at ghawkins@msatp.org. Have a great one.